Undeniable. It is simply undeniable that the bull market is continuing. The market put in 3 record high closes last week alone. And since the November 8th election, it's pretty much gone straight up. And this is at the end of over 7.5 years of the market pretty much going straight up. A remarkable bull run. And in looking at every measurement, every technical indicator, it is undeniable that it is continuing. Now, while it's undeniable that the uptrend is continuing, what is debatable is when and what price level it will end at. And it's anybody's guess at this time, but it's certainly debatable, even though the current trend is undeniable. Let's look at a couple articles that talk about it, and let's have a little bit of fun here. I call this newsletter Beyond the Noise, and I like to look beyond the noise of sometimes what's in the financial press and headlines, and have a little fun, and but ultimately get to what the reality of the charts are saying. So here's an article from Business Insider, and the headline is, here's what 9 Wall Street pros are predicting for the stock market in 2017. So nothing too remarkable about that headline. Great, we're going to get 9 heavyweights to predict the stock market in 2017. You read right into it. Third paragraph. Here's a remarkable statement. For the next year, no strategist at a top Wall Street firm forecasts that the bull market will end in 2017. What? No strategist at a top Wall Street firm will forecast that the bull market will end. No dissension, no debate. Wow. The fact that every analyst at top Wall Street firms are forecasting that the bull market will continue through the entirety of next year. I should go short the market right now. We never have that kind of consensus. That is some kind of weird collective hypnosis. And it's just shocking. It's just shocking. I don't think I've ever read a statement like that. No strategist at a top Wall Street firm forecasts the bull market will end. Wow. Really? I think it might. I'm not a strategist at a top Wall Street firm, but I'm a pretty successful trader. And, yeah, we're in an uptrend. That is undeniable. And we're pretty much near 8 years into it. Kind of a record run. Now, sure, it could continue up. Well, my style of trading, I like to trade with the trend. It's kind of like going with the tide in a boat. But I hate to chase a trend and to get in late, because they can end unexpectedly. And just about the time it really gets going, that's when, the last people will get in, and the thing reverses suddenly, and it's over and you lose money. So I hate to chase trends. And I feel like getting along into the indexes right now is chasing a trend. Now you can be out and watch it go up and wish you were in it. So I'm focused on individual stocks, individual sectors that really aren't tied to the broad market, that have their own market, their own cycle, their own trends. I like to get into trends early and then try and stay with them, not to chase them. And I think getting long into index-related trades is chasing the trend. And it could continue up, but eventually, someday, it will correct. They always do. When's that going to happen? Could be tomorrow, well, Monday, at the open, or it could be 6 months from now. It could be a year from now. It's just stunning to hear that no analyst is predicting that the bull market would end next year. Let's look at another article that's kind of fun. Here is the CNN Money Fear and Greed Index, and this thing's pegging at extreme greed. And what's interesting is you look at a chart down here of fear and greed over time. Greed peaks right before the market goes down. Last year, the beginning of this year was marked as one of the worst starts to a year for the market ever. So 2016 started off, greed was peaking right before that happened. We're at much higher levels now. That's not a real good scientific technical indicator, but it's certainly interesting, isn't it? Now here's something a little more technical. Here's the S&P 500 sales growth rate by quarter. Well, what jumps out? Last 4 quarters negative growth. The one before that, the fifth quarter, nearly zero. So against declining negative earnings growth in the S&P 500, we have continued movement up. Can that be sustained? Yeah, I think at one point the investors are going to look around and realize that the boat they're sitting in has no water under it, that the tide went out a while ago. And when it comes down, it may come down pretty quickly, down to the water. Now, obviously, there's a lot of euphoria right now. It's funny because all those same analysts who now don't think the bull market is going to end in 2017, a few short weeks ago, were forecasting that if Trump won the election, the market was going to tank and it was going to be catastrophic. Now they don't see. Now they're looking a year out, saying, "Yeah, this isn't going to end." That lacks a little credibility for me. So what are some things coming up that could disrupt this trend and potentially end it? Well, first of all, here's a scenario. This is unlikely, right? But we got some key dates coming up here in the Electoral College. So December 13th, which is Tuesday, that's the deadline for any gyrations around choosing the electors who are going to go cast their ballots for their states for the presidential election. So any final gyrations and quarrels and manipulations and whatever you want to call it, right? Any controversy and last minute moves, they have to be done by December 13th. That's when the state says these are our electors. And then on December 19th, the electors actually cast their votes. And at that point, barring something really incredible, Donald Trump will be president, Mike Pence will be vice president. So if those processes get disrupted, is that going to affect the market? Oh boy. So that's something to really pay attention to and to watch. Unlikely that the outcome's going to be changed, but if there's even a hint that it will be, look out. So here's something that's more likely to happen. This is the economic calendar published by Bloomberg Markets. It's the calendar of important economic news and reports coming out. Nothing really happening until Wednesday, but here on Wednesday, the 14th, let's get the right week up here, the Federal Open Market Committee will end their meeting and make their announcement. And this will be the announcement about interest rate cuts and whether we're going to have another interest rate cut this year or whether they're going to put that off. All eyes are going to be on the Fed come Wednesday at 2 o'clock Eastern time, and that could be a disruptive factor. Whatever they say about interest rates and whatever their forecast and their thinking about it is. That could be very disruptive. So just to wrap up my comments here on the S&P 500, it's in an uptrend. It's undeniable. Even if there's nothing disruptive that comes out, price moves in higher highs, higher lows, higher highs, higher lows. So some kind of a pullback, even if it's going to continue on and continue to astonish me, some kind of pullback is probably going to happen. And if something disruptive happens, there could be a fairly dramatic reaction to that. But at the moment, right now, we're in an uptrend. The bull market's continuing. That is undeniable. Let's go look at oil real quick. So oil is pretty interesting. We had a pretty good rally. We came down, massively over the last couple of years, down from $120 a barrel. We found a bottom, moved up to the mid 50s, and then last summer it pulled back, and it looks like it's trying to get the next leg of this rally up. I'm still looking for it eventually to get up into the low 60s to 80s as a retracement to that big move down from 120. And it looks like it could be getting going. We need to take out this previous high put in October and take it out with some vengeance. Now, this move up here, this recent move, OPEC reached an agreement, and they said they're going to cut back production. And OPEC is notoriously fickle. The previous Saudi energy minister said, "Yeah, this could work, but we tend to cheat." And the OPEC players haven't always stuck to their agreements, and they've pursued their own self-interest for their own countries. But here's something new that came in, and this is other oil-producing countries, notably Russia, has joined OPEC in a rare, coordinated push to cut oil output and to raise the price of oil. So will that happen? Is that really going to go down? Here we got Alexander Novak, Russia's energy minister, meeting with Khalid al-Falih, Saudi's energy and industry minister, shaking hands, going, we're going to do it. So will they do it? Will the top world oil producers actually join in cutting production and driving price up? If so, we could see some real price increases. That could have some real teeth. So we're going to watch this, and there may be some fun trades in oil, but it will be volatile. Take a final look here at gold. So I had said that gold was going to continue down and sideways. It's gone down really, really sharply. So is it going to find a bottom? It's in, we had a nice bullish run earlier in the year. It's retraced about as far as it can go down into the zone between these blue lines here. So if it goes below that, then this is a new trend. We could be heading lower. If it reverses pretty quickly, we could have another leg up, another bullish leg up on gold. So we're pretty far from proving that that's going to happen, but it bears watching. So we'll be keeping an eye on that and providing updates. Well, that's it for this week. We're in a bull market. We're still in it. We're putting in new record highs on the indexes. Oil could be taking off, and let's watch gold and see if it finds a bottom here and takes another leg up. It won't be boring going forward. Some key dates to watch: December 13th for finalization of the electors, December 19th for the electoral vote, and then December 14th for the Fed Open Market Committee meeting release. So next week we'll have plenty to report. Take care, and we'll catch you next time. Thanks.